Financing a car with no credit sounds impossible to many people, especially in the United States and Europe, where credit systems control almost every major financial decision. But the truth is, millions of people buy cars every year without having any credit history at all. Students, immigrants, young adults, self-employed workers, and even people who avoided loans their entire lives all face the same challenge. They need a car, but lenders say they have no credit. No credit does not mean bad credit. It simply means there is no record of how you borrow or repay money. To a lender, this creates uncertainty. Banks and finance companies do not lend based on emotions or personal stories. They lend based on risk. When there is no credit history, they cannot calculate that risk easily, so they often choose to say no, even if the person has income and savings. Understanding this mindset is the first step. Once you understand how lenders think, you can work within the system instead of fighting it. In the United States, credit scores such as FICO and Vantage Score are used to predict how likely someone is to repay a loan. In Europe, the system is different from country to country, but the principle is the same. Banks and lenders rely on credit registries, banking history, and repayment behavior. If there is no history, the lender has nothing to measure. This is why people with money in their bank account can still be rejected for car financing. Traditional banks are usually the strictest lenders. They prefer borrowers with established credit because it reduces uncertainty. When someone with no credit applies for a car loan at a bank, the bank often sees them as an unknown risk and declines the application automatically. This is not personal. It is policy. However, banks are not the only place to finance a car. Car dealerships play a major role in helping people with no credit get approved. Many dealerships work with multiple lenders, including those that specialize in first-time buyers. These lenders understand that everyone starts somewhere. In the United States, many dealerships have special finance departments designed specifically for people with no or limited credit history. In Europe, dealerships often offer manufacturer financing or internal installment plans that are more flexible than banks. Used cars are especially important when financing with no credit. A used car costs less, which lowers the amount being financed. A smaller loan means less risk for the lender, which increases the chances of approval. It also reduces monthly payments and interest costs, making the loan more manageable. Another powerful option for financing a car with no credit is using a cosigner. A cosigner is someone with good credit who agrees to take responsibility for the loan if the borrower cannot pay. This could be a parent, spouse, sibling, or close relative. When a cosigner is added, the lender evaluates their credit history instead of focusing only on the borrower's lack of credit. This arrangement allows the borrower to build credit while making payments on the car. Over time, as payments are made consistently, the borrower's credit profile improves. However, this option requires trust and responsibility. Missing payments affects both the borrower and the cosigner, so it should never be taken lightly. Money can also compensate for missing credit. A large down payment significantly increases approval chances. When a borrower puts down 20 to 40% of the car's value, the lender's risk decreases. This shows commitment and financial discipline. In Europe, down payments often carry more weight than credit scores, especially for first-time buyers. For example, financing a smaller amount after a large down payment reduces the lender's exposure. It also lowers interest rates and shortens the loan term. This strategy is especially useful for people with savings but no borrowing history. Income and financial stability matter just as much as credit. Lenders want to know whether you can afford the loan. Proof of income, such as payslips, employment contracts, bank statements, or tax records, can help demonstrate reliability. Even without credit, consistent income over 6 to 12 months builds confidence. In both the US and Europe, showing stability is critical. This includes steady employment, consistent residence, and responsible bill payments, such as rent and utilities. For immigrants and self-employed individuals, bank statements and contracts can help replace traditional credit records. Some lenders offer credit builder auto loans specifically designed for people with no credit. These loans often have higher interest rates at first, but they report payment history to credit bureaus. The main purpose of these loans is not just transportation, but credit creation. After a year or two of consistent payments, refinancing becomes possible, often at much better rates. While exploring these options, it is important to avoid common mistakes. High-interest buy-here-pay-here dealerships often charge extreme rates and may not report payments to credit bureaus. This means the borrower pays a lot of money without building credit. Any financing arrangement should clearly state that payments are reported. Another mistake is financing more than you can afford. Approval does not always mean affordability. Monthly payments should fit comfortably within your budget. Missing payments damages your future financial options and can trap you in debt. The smartest approach to financing a car with no credit is preparation. Saving for a down payment, gathering income documents, researching dealerships, and understanding financing terms all improve outcomes. Asking the right questions and comparing offers can save thousands over time. Financing a car without credit is not about shortcuts or tricks. It is about understanding how financial systems work and using legal, responsible paths to build your future. Credit is not built overnight, but every on-time payment moves you forward. Your first car loan is not just transportation. It is often the foundation of your financial life. When handled correctly, it opens doors to better interest rates, housing opportunities, and financial freedom. The journey from no credit to financial stability starts with knowledge, patience, and discipline. The system may seem intimidating, but it is designed to reward consistency. Once you understand how lenders think, you can make smarter decisions and take control of your financial future. If this video helped you, like it, subscribe to JeffTube Finance, and comment which method you want to try.